Welcome to my video. Today I'm going to talk about tax planning before the tax deadline on the 5th of April. In this video I want to talk about the different ways you can plan your finances ahead of the 5th of April tax deadline. There are lots of different ways that you can do that. You might want to prepare your balance sheet so that it looks better. You might want to reduce your taxes. And there's lots of different taxes that you might want to be thinking about as you prepare for the 5th of April. My videos are about tax planning and your finances. If you don't want to miss future videos, please subscribe to them. Press the subscribe button or the bell button so that you can be notified on future videos. I'm also always interested to hear your comments, so please comment below. Probably the most important area where you can prepare your finances to save money, save tax money, is through pensions. And it is worth looking at whether you want to make pension payments before the 5th of April so you can make the tax saving in this tax year. Although the tax savings on pensions are amazing, it is also a very complicated area where the amount that you can put into pensions varies on various different criteria. So if you are thinking of putting money into your pensions, then please get in touch and we can work out what will work best for you. ISAs are a way of making sure that your savings don't get taxed. There's a £20,000 limit for each person, so if you're a man and a wife, that's £40,000, and you get a limit for each tax year to the 5th of April. So if you haven't used your limit for this year, you might want to think about putting money into an ISA before the 5th of April. And ISAs can be cash ISAs, which actually are of limited use because the interest rates are so small, or they can be equity or share ISAs so that you can invest in the stock market. The stock market has done amazingly well over the last year. So for a lot of people who have invested in the stock market, they've got substantial gains. And you might want to think about crystallising some of those gains before the tax year end to take advantage of your £12,000 a year annual allowance. Other ways that you can save tax money through government-approved schemes are EIS schemes and venture capital schemes. Now these are high-risk investments, but you can get maybe 30 or even in some of them 50% of your investment back as a reduction in your tax bill. So if you've got a substantial tax bill and you want to reduce it, some EIS investments can help reduce your tax bills. But you must be aware that these are high-risk investments. So EIS and venture capital investments, although the tax is really good, that's no good if you lose all of the money because the investment actually doesn't make any money. An often overlooked area is dividends that can be overlooked when you're looking at how to make your tax efficient. Whether these dividends are paid before the tax year end or after the tax year end might be really important to you and might make a lot of difference to how much tax you have to pay. So observing that and calculating it can be an important calculation to make that can save you a lot of tax money. Inheritance tax is not one that we traditionally think of in terms of the 5th of April tax deadline, but you can give money to, for example, your children in small amounts each year, and you get a new limit each 5th of April. So if you are thinking of giving money to your children, then having the 5th of April deadline can be something to work towards. As well as the 5th of April year end, we've also got your accounting year end. And the accounting year end is also important to think about one or two things that you can improve and tweak. A lot of companies that have made a lot of money over the last few years and therefore end up with some very high tax bills. Now, to some extent, this is a first world problem. You have made the money, but nobody likes paying tax. And one of the ways that you can reduce it is by investing in your business and buying equipment. And if you buy, the timing of the purchase of that equipment can be really important in terms of how much tax you have to pay. So thinking about whether you want to buy equipment before your year end or indeed after it can be really important to your tax and is definitely worth looking at this time. There are other things that you can think about in terms of your company accounts. It can be important to have cash in your business to show the world that the business is well solvent and well run. So making sure that there is cash in your business at the year end can be important. Cash to pay your tax bills, for example. If you're thinking of giving some of the money away to reduce your tax bills and to make charitable donations, because that's something you want to do, doing it before your year end can also affect when you pay your tax and can be important. And lastly, I think perhaps one of the things that's also worth looking at, which isn't really tax related but is accounting related, is that the way that accounts are prepared in terms of the automation of accounts is moving quite fast at the moment, and changing things at the year end can be really good time to change it, because then you have a whole year with the new system. So if you're thinking that maybe the way that you do your accounts is not as efficient as it could be, and using your year end as a deadline to make the changes so that you have a whole year ahead with the new system can be very useful, and I would recommend it. In this video, I've set out a number of different ways in which you can affect the tax you pay, particularly by the timing, but also using deadlines such as the 5th of April, your year end, as a deadline to get things done so that you can improve your accounting in the future. Thank you for watching, and I'll be really interested to see what you've been doing in your business. Please comment below or speak to me personally, and I'll be interested to find out. Thank you.